budget. But what is your feeling? What is the economics of this budget, and does the economics make sense?
Right, Abby. I think I'm going to fashion my views like E.T. now, give the headlines.
Okay.
First, I think the budget process began in September 2012, where quite clearly the twin deficit issues were getting addressed. So FDI, more importantly, diesel price correction, all these were initiated starting September. Then, of course, we have the budget announcements, and I think this process is going to continue right through the budget session, very importantly, because it's not just the budget arithmetic, but critical bills are pending in the Parliament, like land acquisition, pension, insurance, which will go a long way in correcting a lot of macroeconomic wrongs or imbalances that currently Indian economy is going through. So that is the first headline. The second headline pertains mainly to the budget arithmetic. You asked how would you rate the budget. I think it's one of the more credible budgets. We do have credible numbers on tax revenue collections. If I were to go into the nitty-gritty, we have a 13.4% growth in nominal. Compared to that, the tax revenue collections at 19% seem plausible, seem achievable.
13.4% is a projected nominal GDP growth.
Absolutely. Okay. Coming to, I'll come to the third headline later, is how much is it possible. So revenues on taxes seem more plausible.
But 500 billion rupees through privatization? I mean, asset sales, not really privatization.
Exactly. I was coming to the latter part of revenues, privatization, as well as the spectrum auction. So those two remain a bit of a, I wouldn't call it gamble, but they need to be monitored, and one has to be vigilant very carefully of all these other streams of revenue that the government is putting forth. As far as expenditure is concerned, I think the switch in expenditure, this exaggerated planned expenditure of 29% is more on the back of compression of 18% in the last year gone by. So quite clearly there is an exaggerated growth in planned expenditure. We need to look at it from that perspective. So I think overall budget arithmetic in terms of subsidies, diesel pricing, the government has promised that they're going to be doing a frequent repricing of diesel, at least at the retail level. That should correct some of the subsidy bill that we see. Diesel subsidies are highest. So we will see some correction there. So to that extent, arithmetic is possible.
So you seem to be agreeing with Swami and his assessment of 7.5 out of 10.
I think a lot of good things in the budget. A lot of things have been factored into kickstart investments, 15% allowance over and above the current rate of depreciation. More importantly, I think for India, MSMEs become very important. And no MSME wants to graduate out of that segment, defined segment, because of the benefits that it
These are micro, small,
medium, micro and small, medium enterprises. I think what the clever thing that the budget has done is allowing them to enjoy those benefits up to 3 years after they've graduated from that MSME classification or definition. More importantly, I think infrastructure, the industrial corridors, financial savings have been a biggest bane for India. We've seen gold and we've seen land savings into these two assets increasing manifold. Financial savings are a must because they impact the banking sector liquidity. So I think there have been a lot of schemes done. Overall, the third headline, and I'll close there, is, so I would rate it maybe slightly more generous than Swami was, maybe at 8, given that he could have been tempted to do big bang reforms. But I would like to repeat what I have been saying since the budget time, that when there is severe turbulence and strong headwinds, I think the captain of the ship and the pilot of the aircraft needs to steady the vehicle that he is driving. And only when he is steady that he can think of taking off or speeding off. And that's exactly what Chidambaram has done. Full marks to him for that. In terms of numbers, I think we are at a 6.1% growth, not 6.5, which was 6.4 that the government seems to be looking at in terms of real GDP growth. Inflation will remain a bit of a sticky issue. Food inflation will take time. Overall inflation at wholesale price would still be believed would be around 6.5% on an average basis. What we could see is beginning of the correction of a lot of adverse macros. We are not looking at quick fire solutions, strong headline numbers. Growth will be around 6.5. Yes. And overall, if I summary of it, I think it's the best budget that the finance minister could have given in terms of the constraints that he was facing.
Fair. All right. But let's have some disagreement here. Now, Manu. Because, Swami and Shubhda both seem to really like this budget. Manu, you don't like it as much.
No, I don't dislike the budget. I think Dr. Rao made the point absolutely correctly. Given the constraints, it is a very clever budget. My concern is it enough? I think a lot of the assumptions that go into the budget are heroic. And I think the budget number that everyone's looking at, fiscal deficit, is held hostage to the events of recently high probability. If you have a spike in oil prices, which is very likely because you have multiple flashpoints in the Middle East, the risk premium goes up, oil prices go up, and the budget is gone. Rupee depreciation is very vulnerable to that. It's very vulnerable to growth disappointing on the downside, which is also very possible. So, it's a very clever budget, and all credit to the finance minister for pulling it off. I think it's a very difficult thing to do.
At least on the spreadsheet level, it has been pulled all right. But now whether it can be translated.
Realistically, it is bought time, but he is held hostage to events of high probability. Then what happens?
Also, one of the other question people are asking is, what has this budget really changed? Where is the reform in this budget?
There is no big idea in this budget, and again, you can't blame the finance minister for it. That's the reality. But again, I come back to the issue. There are some things that had to be achieved by policy. One is to get the fiscal trajectory right, and he's done it on the assumptions he's taken, but then I'm not sure whether it's sustainable. Second thing he had to do was to address imbalances, and he's partially done that with the fiscal deficit. But again, I'm not sure whether it's going to work. And then he had to revive growth, which I think is going to be difficult to do because, as you said in the previous discussion, when the budget deficit number comes under pressure, development spending, capital spending, pro-growth spending will have to be sacrificed in order to get that sacrosanct number of the fiscal deficit on track. So it's not going to be very good for growth. And finally, what a budget is, a budget is also a political statement. A budget is there to send the right political signals in order to build the case for what the Prime Minister and the Finance Minister believe in. And I didn't see that. There was no courageous statement saying this is what we believe in, this is what we're going to fight for.
Right. Now, Vivek, coming to you. What is in this budget for the corporate sector? There is an investment allowance. How significant is 15% investment allowance? Do you think this is going to be a game changer, or is there a game changer in the first place in this budget?
Yeah, I think the investment allowance is one of the positive points in the budget. It's for a 2-year window, which is meant, I believe, to accelerate capital spending by the private corporates so that you can kickstart economic growth. So that's positive. In fact, we've been used to investment allowance for all these years. I think restored back is a positive thing. I think the other positive from the business point of view is there's been no excise increase. And that's a very positive as well, because you're used to seeing excise duty, sales tax going up. The other positive is, I think, which everybody has talked about, but that's a big relief to corporates, is that they have managed. I mean, it was a very difficult time for the budget. There are 4 difficult issues facing the government: the current account deficit, fiscal deficit, slowing growth, and inflation. It's almost like in cricketing terms, you have a 300-run deficit. Number 8, number 9 comes in, and Dhoni and Bhuvnesh Kumar are saving the match for the country. Now, we don't know if they can win the match because execution is going to be a challenge, because some of the assumptions we know are quite optimistic. But it's a great budget in that sense that corporates can feel relieved that you don't have the risk of India going back to junk status, exchange rate going to 60, which creates big problems for imports. It also creates a problem for the country as a whole, inflation. So that's positive. I think there is a lot of spending. The other good thing is no populist measures, which partly is limited because of the deficit that they have to maintain. I think the focus on capex is very good. The Delhi-Mumbai industrial corridor, Bangalore-Chennai corridor, these are all positives for industry. It opens up a lot of new cities, airports, ports, which will be pretty good. So that's good. And I think the one issue which has not been mentioned, but which is a great advantage from the government point of view, is this unique ID system. The amount of leakage that you see in the budget and all this spending, if this can be managed well, I think that itself will contribute to a significant saving in the budget.
Right.
Quickly, on the negatives, I think we don't see much done on declining FDI. So yesterday that the FDI has gone down by half. So we didn't see any measures to stimulate that. I think the issue about retrospective tax has been not addressed in this budget. As we all heard, there's no specific reforms. So given the political environment, that's difficult to get reforms done. I think one of the things, as we know, if you look at Europe, the ECB is focusing on making sure there's enough liquidity in the banking system. And that, we know that Indian, especially the public sector banks, are facing a lot of liquidity issues, a fair amount of sticky loans. So we're hoping for recapitalization, where a lot of credit, economic growth is going to be.
And it hasn't provided much by way of budgetary support for recapitalization of the PSU banks.
Yeah, I think that's something that would need to be done. I think the tax rate, we're glad it's only increased by 1 percentage point, but today at 31%, it's one of the highest in Asia. China is 25, most of ASEAN is 25 or less. So the tax rate going up, and especially for MNCs, the increase in the royalty rate on the increase in the ruling tax on royalty rates from 10 to 25% is a big negative. I think intellectual property rights are going to become very expensive for a lot of companies. I think it's going to affect Suzuki, it's going to affect Unilever, because although we have 84 treaty countries, the treaty rates have been higher than 10% before, but are lower than the 25%. 25% is a penal rate that's used for most countries. So that's a bit of a negative. And I think, as Manu said, I think we have no bullets left for any external shocks. And that's a bit of a worry, but overall, within the scheme of things, it's a super budget.
Okay, it's a super budget. That's good. All right, Vikram, coming to you. Now, Vivek briefly mentioned the unique identification scheme. Now, that will have a role to play in direct transfer of subsidies to beneficiary accounts by the government, which is one of the things that has been talked about and has also been mentioned in the budget. Is that a game changer?
That can be a huge game changer, and that deserves a discussion in its own right. But just to backtrack a little bit, if I may just give a broad view of the budget, which I think it is not a fantastic budget, it is a good budget. It's, as Swami said, for the first time we've had good economics makes good politics. I think that's unusual, and it's wonderful to see. It's not a populist budget, nor is it an austerity budget. And a lot of people were expecting an austerity budget, and it didn't happen. And the thing is, he's kept the fiscal philosophy very simple. He's kept a three-slab tax structure, 10%, 20%, 30%. The philosophy is to raise revenue by broadening the base rather than increasing rates, except for the super rich, which I think is more symbolic.
Yes.
It's only 43,000 people. So I think that's good. I have a few problems with the investment allowance, which is a wonderful thing, but why only 3 years? And somebody raised the point the other day, I think Abhijit from White's Waterhouse. Why not for longer? It's like giving a kid a gulab jamun, when you're good. He said, but I'm only going to leave it on the table for 2 hours. If you can be good, and then you can get it. But I think investment allowance should be standard. It should be there all the time. It's a normal policy. The kid should get his gulab jamun every time he's good. It shouldn't be just for 2 years. So and the allowance could also be extended to services. I don't see why it should be confined to manufacturing. Services also create job-creating investments in R&D, in the software sector. You can think of the tourism sector. I mean, there are many services. Services is our biggest sector in the economy, so it's strange that it should be limited to that. I think Manu and Vivek also mentioned the point about foreign investment. We're here supposed to talk about the Asia-Pacific impact, and there's really nothing in the budget for foreign investors. I mean, the whole Vodafone tax thing is still up in the air. I mean, okay, these are not finance minister's fault, but that's still an uncertainty. The whole GAR thing is being postponed and it's going to be modified, but that's another sort of Damocles. That's more draconian, extremely draconian piece of legislation that creates uncertainty for foreign investors. So I think these are some issues that will have to be ironed out. They're not strictly budgetary issues, they are partly political issues. But to come back now to your main question on Aadhaar, I mean, I think it's, as you said, it's a tremendous expenditure control measure if it works well, if it works as it should. The money goes straight into people's bank accounts, which are biometrically verifiable. There's no leakage along the way. There's supposed to be no corruption, blah, 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 all that stuff. But I think the game-changing aspect of it is not here. The game-changing aspect of it is it's going to lead to something like 150 million, 200 million people opening bank accounts over the next couple of years. I mean, think of what that's going to do for financial inclusion. Think of, for the first time, people will have a bank account. They can, it gives them more clout as a consumer vis-a-vis both government services providers and private sector providers. It opens the opportunity for them to take loans. It opens the opportunity for them maybe to start investing in some small way in financial instruments. We're talking about gold, for example, being the investment of default for the poor, an inflation hedge. Well, they have no access to financial products. They're not part of the formal financial system. I mean, this is the big game-changing aspect of Aadhaar. I think it's not so much just the delivery of subsidies. That is big and huge. But I think the big thing is financial empowerment for the assets. So that's my take on it.
Okay, Swami, coming to you, you've heard all the panelists, and more or less everyone seems to agree with your assessment. But one question and the point that both Manu and Vikram raised, which is that there is much in this budget for the foreign investor. Now, what is today the relationship between India and the foreign investor? Because obviously, if you're running a current account deficit of 5% of GDP, then the foreign investor for you is almost as important as what Mahendra Singh Tikait used to be in terms of when he demanded free power, he got it. So now, which means that the government of India can never tax foreign investors, and it's only the hapless middle-class salaried employee in India, resident Indian, who will forever pay for the government's fiscal deficit.
The answer is very clear. In the first place, you say, what is in it for the foreign investor? The lurking suspicion is most of these foreign investors are Indian politicians round tripping their money. Right? Very, very clear that there's a huge number of loopholes and leakages which you have to go after. In fact, when he says, tax residency certificate is not enough, I must also know who is the actual beneficiary. I mean, genuine people abroad, there should be no alarm. I mean, I can understand every round tripper getting worried about that. But there's no question that the government is going to have to go after a number of guys who have been misusing the system. What concerns me more actually is something that others didn't bring up. In the case of Shell, transfer pricing is a biggie, but it's a biggie for everybody. The G20 has gone into it, saying it's an issue. But transfer pricing normally applies to goods and services. In India, in the Shell case, for a fresh subscription, they declared that this particular thing they're going to cover by transfer pricing. India, a fresh share issue, technically, is not income, it is a liability in a company. How on earth can you put a tax on a liability? Because I said, there is a certain amount of cleaning up to do on this thing. On the other hand, there are people who are saying that yes, but you see, everybody knows that income can be hidden as a capital transaction, so it can't. So I said, on the one hand, it's very clear that globally there is an issue of tax havens and transfer pricing. So India does not stand out in that respect. Maybe that's one reason nobody mentioned it here, although it did come up in the headlines in India. But yes, there is a definite feeling in India that tax evasion is a bigger problem than scaring away foreign investment. So whatever we have, pluses and minuses, foreign investment will come in, but we really have to get some revenue because too much is leaking out. The tax to GDP ratio is a low one and needs to go up. Now, it's not the case that things are that bad. We are improving. Corporate tax to GDP has shot up from 1%, I think it's now up to 1%. So it's not as though nothing can be got. But they are very, very clear that we believe that India is sufficiently important that foreign investors are going to come in anyway. So you don't really have to prostrate yourself on the floor. Make it attractive, yes, but also make quite sure you don't use the round tripping, which has been on a large scale. And this is not just this. The so-called remittances into India of $70 million. Nobody believes that this all comes from Indian laborers who are going out with a spade and shovel. Because the remittances have increased from $1 billion in 1990 up to $70 billion. It It will take a lot of Indian workers with shovels to increase 1 to 7. So that money is coming from all kinds of other guys. So they said, we need a better identification of where it's going. Not only that, they said, look, if you have a situation where all the Indians who sent their money out are now bringing it back because India is a good investment place, surely it can't be such a bad place for genuine foreigners either.
Sure. Now, Shabda, you briefly mentioned this point and others also picked up on it, which is that financial savings. Now, these are the savings which get channeled through the banking system into investments. And financial savings have declined because households have been buying gold as an inflation hedge. Now, this budget is trying to give other alternatives. For instance, the Rajiv Gandhi equity plan, inflation index bonds. Now, if you would like to talk a little bit about the inflation index bonds and whether that's a smart idea for the economy at this stage.
I think it would be, this idea has been mulled over for almost a couple of years between the Reserve Bank of India and the Ministry of Finance, and particularly seeing the stickiness of our Indian inflation trajectory, we're unlikely to come to a 4.5% to 5% inflation, at least over the next couple of years, unless very dramatically the supply side of economics improves, and that's not likely to happen. So if inflation is proving to be sticky, you need alternate avenues to hedge against inflation. And I think this probably is the most opportune time to make a success of it. And from the preliminary cues that we get, I think there are already inquiries as to when is it likely to be launched. So gold, yes, gold appetite in India is not going to come down. What you really need to do is how do we monetize gold, and for that you need to create products, embed some financial kind of features to gold, because gold savings are unlikely to dwindle very fast. So I think we need to think some out-of-box ideas as to how to channelize gold to make it into a productive asset for the economy. And till such time we are going to, you look at the banking sector deposit growth, it's pretty much lower at about 12.5% or thereabouts. And your investment, credit is growing much faster, so you have liquidity issues there. So I think inflation, index bonds, Rajiv Gandhi equity scheme for another 3 years, infrastructure bonds, these would probably help channelize. But I think one thing is very clear, that at the root of it is how quickly we are able to reverse the adverse macros. We need to look at growth opportunities. We need to look at growth reversing the deceleration mode that it is in. We need to see anchoring of inflation expectations, and we need to see this the beginning of addressing of current account gap and fiscal deficit. This finance minister is going to surely deliver on for 1 year. Remember, he has not rolled back any of the measures except for a tiny little one from 6 to 9 LPG cooking gas cylinders. So he has a track record of not rolling back any of these measures. A lot of it rides on that confidence. So unless and until we improve our macros, even for foreign investors, they're not going to get confidence in India is not able to address inflation. And because of high inflation, the Reserve Bank of India's hands are tied. They cannot ease interest rates as aggressively as they ought to be, looking at the growth cycle currently that we are in. So I think even for a monetary policy, it becomes very important that fiscal policy both of them need to work in tandem.
Sure.
You can't have deviation over a period.
Right. Now, I will need to start wrapping up the discussion now, but if I can do that by asking maybe one question to one, which is that, now, you did mention the probability of accidents at this stage being high because of the factors that India has no control over. Now, if you do get a situation when there is a sudden aversion among global investors for taking emerging market risks, then in Asia, it's hard to think of another economy which is probably going to be hit worse than India. I mean, it's either India or Indonesia, given that both are running current account deficits, but India is probably among the most vulnerable. Right. So now, how would you like to have seen some more steps being taken in this budget to particularly address or specifically addresses the current account?
Well, there are two issues with the current account. One is that you have, what are the underlying drivers of the current account? It's the imbalances that Rahul referred to. One of the imbalances is that you have excessive easing conditions. And for that, you really need an independent central bank. Reserve Bank of India is an excellent central bank, but it's not as independent as it should be. If it had been, I suspect, inflation rate would not be as high as it is today. That's a fundamental change that goes beyond the budget. And I mean, the second issue is how do you fund the current account? We fund it essentially through the capital account. A large part of that is foreign direct investment. So I must respectfully disagree with Swami here. I think you need foreign investment, not just for the real economy, but also to fund the current account deficit. And essentially what you need to do is to give some assurance on the risk side to investors, whether it is tax or some other issue that those risks are taken care of. And the other thing is that you want to ensure that investors are not coming here out of altruism. They come here to make money, right? And you have to look at the rate of return on investment. And people are not being their way into India because there are a lot of choices. And if you look at data for Japan's investments abroad, US investments abroad, consistently India offers a rate of return on investments much lower than lots of other countries. And it's got to get that right.
Now, that's an interesting point. Now, Vivek, one said that monetary policy in India has been loose, and inflation is probably a result of that. Now, but the corporate expectation in India right now is for deep interest rate cuts. So, do you think after this budget and on the basis of this promised consolidation, the Reserve Bank of fiscal consolidation, the Reserve Bank of India is now going to give the corporate sector the lollipop that it so badly wants?
Yeah, I think the finance minister's budget is obviously the key driver has been that the RBI has been saying is fiscal consolidation. And at least on paper, the budget delivers that. Execution, I think we know there are some challenges there. So I think the door has definitely been opened for RBI to step in and do something to reduce interest rates. I think that is hurting. There's a construction industry. Everybody you see that there is a severe impact of high interest rates. And in time of slowing growth, I think if we can get a respite of the interest rates, that would stimulate growth to a significant extent. So I think the trade-off that RBI would do is lower rates versus inflation. And that's going to be a delicate balance. We hear that the headline numbers are declining, but it's gone to single digits. So the declining inflation coupled with fiscal consolidation, I think does make it a lot more easier for RBI to look at taking cuts. I suspect it won't be very aggressive, be step by step, and keep a close watch on inflation.
Vikram, would you like to comment with your closing remarks?
Well, just one thought. I mean, I think I would agree with Swami on the need to close loopholes for round tripping. But I think I also passionately agree with Mano on the need for foreign investment. I think it would be a sad day for India if foreign investment is put on the back burner. I mean, I agree that the priority should be to fix the macro. If you fix the macro, you immediately make your investment climate more attractive. But I think there's a huge amount of work to do on foreign investment. I think there's large sectors that, insurance being one of them. I mean, this will change the game on infrastructure financing, for example, that insurance companies, pension funds all come in. I think defense is another matter. You should go about 26%. Defense has huge technological spin-offs, as we've seen in so many countries. I mean, I think that will